All right, so this is our weekly analysis on GDP/USD, and this is week 36 analysis forecast. We're looking at the market for the week 36. Week 36 begin on Monday morning. All right, so we're looking at how is the market going to be like for us that is trading this beautiful pair, GDP/USD, and what are we anticipating for the market to produce within the week. That's what we're looking at. So this is a lot of times you have to go through what we call the top-down analysis to be able to understand what the market is preparing to do. Okay, and that's what we're looking at. You have to go through the top-down analysis and then position yourself in the market, and then we'll be able to catch more opportunities as they come up on your daily trades, because everyone here, I assume we're all day traders. So because of that, we want to look at for opportunities within the day, and then that's it. Now, I know some of you don't like the idea of day trading. If you're watching this video on YouTube or anywhere, I want you to hit the subscribe button, hit the like button, turn off your bell notification, because every week you don't want to miss this. If you trade GDP/USD, you don't want to miss this. So for those of you watching and participating on our Zoom live call, I want you to know that we are on YouTube. If you haven't subscribed yet to our YouTube channel, you better do so, because the video will be posted right there. If you miss anything, you will be able to watch it again as soon as the notification hits you up. So the best you want to do is to go on the YouTube and type in Charles BrownFX. You will be able to find me there, find my YouTube there, and I also put it in a box description, probably in the chat box in a few seconds and a few minutes, and then you'll be able to hit the subscribe button and go through that. Is that all right? And if you have any questions, you'll be able to get in touch with me in the Telegram group. Do not hesitate to do that, because that's the place you're actually going to reach me quickly if you want to send me any questions or want to make any inquiries about our trading strategy. Okay, now we are looking at overall downtrend in the market. Ever since we've been talking about this for a couple of months and weeks, and this because we're talking about a couple of months, we're looking at this block here as a downtrend, right? So the market has been trending massively for a couple of months to the downside. So we see that block, and we saw that in the last few years, COVID actually came to this low on the COVID section where we had COVID. All right, we saw that the market came down in the month of March, smashed all the way down, but went back up again. All right, when the whole thing started getting better, vaccine started coming up, people started coming to, because UK first of all got in with a better vaccine that people could use. So we find that a lot of people started coming to the United Kingdom, traveling all the way down from wherever they are to be taking the vaccine, get registered, take the vaccine. So we have people coming in to take the vaccine. So we have a major push up within that time frame until late last year, which was close to May and July of June actually, and we have May and June yet. Market started dropping. So what happened at this time? Those who have already taken their several boosts and everything started making several choices. So then we saw a massive reverse of that push up that happened after the COVID, and then we started seeing a drop again. All right, we started seeing another drop again. So within this year, April, we started dealing with another between March and April. Let's be specific with March. We saw that price came up to the zone and created a little price action, and then eventually drop again. So some of us were thinking that this was just a pullback at the time when this whole thing was happening, that we had a little pullback after the massive run that happened. All right. So we saw, okay, this is a pullback, and we were looking at this area to eventually take the market up. All right. But it failed. It failed because of the Russia and Ukraine war that eventually broke out. So eventually the market started dropping again massively as a result of that war, and destabilizes everything. Oil and gas went up, price of commodity shoot up the roof, things started changing, a lot of problem coming up, inflation, everything, and market came down again. So we could see this as another form of pandemic that actually repeat himself over here. All right. So we are saying that there's another pandemic here that happened again. So it is not just like it had to be disease, it had to be all the form of like we had on coronavirus that we have to say is a pandemic. In fact, inflation is a pandemic of its own, if you're looking into it. So that's what we found that is happening. The war in Russia against Ukraine has made this massive drop. Why was that? Because a lot of people started buying US dollars. They started taking US dollars as their safe haven, where their price, I mean, their what do you call it, their money will be more secured for future purpose and commodity use. So for that reason, the British pounds was losing more momentum, was losing power, and US dollars was gaining more because a lot of people started using the US dollars as their safe haven. That means converting their currencies wherever they are or whatever they are into the US dollars, and then putting it in as their major currency. So we saw that this has been happening, and we have been seeing it happening, and all of the move that we're seeing that is happening now is still based on what I just explained. So the market is still dropping with that understanding that the US dollars is still being used as a safe haven because of the war that is still going on, the inflation that is going on in different parts of the world. And they still find that the US economy is even more stable compared to other parts of the world at this moment where we speak. So if you look at do your fundamental research, you'll be able to find some of these things that I'm telling you. So what are we not looking at for the week? We find out that the market has come to the previous lows. So created a super lower low. I call this super lower low because that's the lowest of all that you can see in the market. So the market created a super lower low, and a super lower low in the sense that double bottom, double low. Okay, this is a double lower low here. If you look at it closely, I think if we should zoom in into the 1 month, this is monthly time frame. If we will zoom in, we will discover that actually it is the market created, just a minute, the market created, this is the point of that low, and this is the point of this low. You see, that's just an equal lows. The line intersected. If the line intersected, then we have an equal lows. You see that? So that means this is a double bottom in the monthly time frame that we see here. All right. So we have a double bottom. So that's the sign of something. It's a great sign for us to look at, okay, what's the market is going to do when it created these double bottom? What is the next move? Well, a rejection, of course, price action. We find that price reacted. So that's why we saw that momentum last week, the bullish momentum that happened in GU. There was a push up as a result of what? The death of the monarch. So last week, was it Thursday or Wednesday or so? Thursday, on Tuesday, Wednesday, I think it was early Tuesday, that it was announced on Wednesday actually that the I don't know, I'm not getting the date right now. never mind. But last week, I think last week Wednesday, that the Queen of England passed on. So now we see this clearly. The market rally up crazily. The market rally up crazily as a rejection from the zone. So what happened? A lot of people started traveling overnight. So if you move down to the down, we will check that out in a minute. If we move down to lower time frame, you would discover that this push that the market did, all right, this push up that the market did was as a result of that. So a lot of people have been traveling into the United Kingdom for what? For what? To consolate, or what do you call it? To witness, actually, first of all, that it is true that the Queen has died. That's number one, and to send their condolence, all right, to the people that they know needs it. In other words, send their coming to have some reality show, participate on what is going on, and then send their condolences to loved ones and relatives that they know that would be affected by that. So people, British themselves, who are in other countries, started coming into their own land, which is United Kingdom, overnight, buying ticket overnight and coming in. The Queen has died, the Queen has died, so everyone flying in, so people changing their currencies into pounds. And then we saw a massive rally push up that night. Over 100 pips push up overnight. And that really happened on GU, except there is this fundamental effect. So, which obviously geopolitically, that actually play a role. Now, remember, I told you last week, if you watch the previous weekly analysis I did, I said market tends to repeat history. You always look at history. Look at what the market did here. Look at what the market did. The same, almost the same thing was repeated here. And I ask you a question, what do you think is going to do next? And that is exactly what is going on right now. Exactly what is going on right now. So looking at this monthly time frame, it speaks a lot of volume of what the market is going to do in a couple of days within this September month. You get it? So that means there's probably, obviously, might be more push-up or a little push down. Who knows? But the pressure is on a downtrend. We know that. But we've hit the lowest of the low. And we find that the market reacts at that low already. So does that mean that the market will still drop the lower? We are not sure yet. We need to see that the market rally up again and then reject. If it does reject and create these patterns that we see, we can be sure that the market is coming to 0.02. Obviously, that's way too low for British pounds. And I will not think that it's going to come that low. So that is obviously not what I'm believing is going to do. So the market will eventually push crazily up. It can push up crazily due to the better economy that British pounds may be experiencing in the next couple of weeks. We just have new prime minister. We just had new king, a new monarch. So everything is changing in the space of few weeks, few days. So we could obviously see that a new change is coming into the market that will make, obviously, the market rally back up. All right, that's what we're looking at. The market will eventually rally back up from this zone. There must be a change in this market structure to push it back up and then anticipating this previous high. So here is the zone we are looking at in the monthly time frame. Here's the zone. And remember, if we're looking at that zone, Remember this previous high, this previous low that the market tapped into. Okay, remember the zone. Market came over there and did some job. Market smashed all the way down here, push up, smash all the way down again, push up, and created another resistance zone at this level. Again, we have another resistance zone at that level. So let me just remove this box so that you can see clearly the pandemic box, so you can see clearly what I'm talking about. So looking at this very picture right now in the chart, what does it tell you? It shows that you have a range at which you can look at price action. All right, there's a range that you can look at price action. So we have price rejecting now. The next key zone that this market will push to on a lower time frame as it rejected this, okay, will be what? This zone. The next key zone here will be here. So from here to this place is how many pips? Then if the market can break this high, that means this trend line is broken, then we know that the market is going to rally up to where? The next key zone. And if the market can break that and still push up and retest, we know it's breaking this previous high to create a new higher high before rally back up. So we will have a pure reversal in the monthly time frame. Remember, this is the monthly time frame. So all of this will take a while. But to begin to climb the steps, the ladder up, you need to go down to the lower time frame to look at the market, which is on the weekly first. You want to observe what the market did on the weekly time frame. Now, all you need to focus on right now is this zone. That's the market zone you need to focus on. So you're looking at that zone to say, okay, what is the market going to do next? What's the market going to do next? All right, that's what you're looking at. What's the market going to do next? So we see that we have a bullish candle on the weekly, which we already experienced last week. All right, this rally up, that is what caused that rejection that we saw on the monthly time frame. All right, so you're looking at this now. It's okay. We see that the market has rallied down here and then is rejecting at this key zone, which is equal low here being created. Now, remember, that is a weekly candle. So that means the next candle that is going to open this night is going to be a different candle that will not tell us whether the market is going to take out this candle, this previous high candle here. So if the candle open up and push all the way up, how are we going to know that? How are we going to know that? Not now, not now, not now. I'm speaking to you as an intraday trader, as a day trader or a scalper. You can see opportunity that the next high of this candle is your trading range. Right now, this is your trading range. Because this is a weekly time frame, remember that. So if you're looking at this as a weekly time frame, then the question will be, what is because the next candle is going to pop open right after that, right? Closes and open up. So you're looking at about 180 pips as a range of the market trading. So the market could move up to 180 pips or even far above it for the week. It could do that. We are not sure what kind of candle is going to come up, but we anticipate that something close will happen like this within the week. Something candle like this will happen. Why would that? There may be a pattern that the market will want to print on the higher time frame, which is the weekly. There may be a pattern. We are not sure. But I know what I'm telling you based on what I've seen the market do is that there is already a bounce off from this key zone. So it's going to rally up. So the next key area that we're looking at that the market will go to for a longer term perspective is about 700 pips. So for those of you looking at the higher perspective of the market, you can actually catch these 700 pips to the upside if the market will choose to rally up. So what am I thinking about? Hold on, there is a There's a platform here making some noise on my chat, on my distance. I'm not sure what that is. Now, I think it's a community somehow. It's giving me a noise. Okay. Okay, that's it. That noise, you hear that? So that's the one. I'm trying to get rid of it. Never mind. So what I'm looking at now is that the market should do something like this. I'm looking at the market should do something which is already done. Solo, don't write on my chart, please. Then you see the market coming down like this, all right, which is already done and it's pushing back up. I'm thinking that something like this may happen to give us a proper reversal that the market will do. I'm thinking that this may be the behavior of this market in the next coming weeks. All right, we might see a rally up, a rally down. Remember, this is the bottom. So when market is at the bottom like this, you need to be very smart and careful. Now, all of this push up that we're looking at, they can use the fundamental news to do that. So do not just think that it's going to just be slowly moving up. No, there are a lot of fundamental news coming up this week and this upcoming week. So we need to see that the market may take advantage. These bankers, these money makers, they will take advantage of those fundamental news to push price above this or higher to these levels. So expect that to happen as well. So let's go to the daily time frame and see what price action we can gather on the daily. All right. Now on the daily time frame, let me remove this dark line, gray line, so you can see properly. On a daily time frame, you can already see what is going on here. The market already gave us a buy signal. A reversal candlestick has happened. This long wick is called the swing low. The swing low hammer that you just see here, a reversal candle. This one here, that green one. So we see the market rally and give us a swing low, created a lower low candle, a lower high candle, sorry, what do you call it? A higher low candle. Okay, we see that created a higher low candle here, higher high, higher low, push up, created a new higher high. This is a daily candle. Remember that. So that means a new candle is going to pop up any moment and then it's going to climb higher. It could climb higher. It could, because we can see the bullish momentum already showing us something, that this signal of a reversal candle is obviously playing out. The previous high has been taken out by this week. Look at that. So we see the market taking up high, off. Okay. Another one, we see that one taking off. Okay. So what do you think the market would do next if it breaks? So first of all, the market will need, how far there's a rejection here, which shows that a new high has been created. So the candle must prove, the next candle must prove to open or to break that previous high. But remember, this is a daily candlestick. Okay, I just want you to know that it's a daily candlestick. So the first thing is to understand that something is already happening at the bottom. We are at the bottom. Something is happening right now at the bottom. So there's probably going to be a retracement. So how do we know? We have to use our Fibonacci now to know what the market is planning to do in anticipation. So from the daily time frame, I can now see how the week is going to be like. Oh, I see now. So the market is planning to rally up for the week. Possibly. You see, possibly the market is planning to rally up. So I'm looking at an area of interest right now, which probably will be maybe this zone. So I'm looking at price eventually mismatched and come up to these zones and then before selling, or push and break out of the zone, disrespect that, and then come back to this previous high and then sell again. That can happen. Or alternatively, the market will come to this zone, which was the previous high here. We see private market structure here, right? We see that market consolidated here, created the liquidity. The market can tap into that liquidity, take that liquidity out, and then drop. So I'm thinking aloud. These are daily time frames. I'm looking at the daily time frame, daily candles. I'm thinking aloud. So there's a difference that the market is going to make on the upside. So I'm looking at that. All right. So I'm looking at what the market is going to do if it will break this support as a resistance level that we see. Will it rally up? Of course. If we can break this resistance that we see, then we have a rally up. So the question will be, how much time do we have for that to happen? What should we, how many pips should we be looking at? All right, in the lower time frame. So you wait for a breakout, and then what happens? You have about 200 pips, like 220 pips or 200 and whatever, 17 pips. So the market can rally up about 217 pips if you break the previous support resistance level. So, oh, I see. So I have a trading floor now for myself. So that trading floor that I'm looking at is from here to the zone. So what do? I take out my interest level, point of interest level off, and then I'm looking at the zone that the market is going to rally up to if you break this high. So I'm looking at this. So what will I do when the market is playing around the zone? What if the market play around here for a while? I'll wait. As long as the market is not breaking the previous low, I'm going to be waiting until it break this high. So as long as the market doesn't break this high and it's still playing around this zone, I'm not trading. I don't know if you're catching the idea. So what I would do is to anticipate that the market break this support level, resistance level, and then we rally up. So how do I position myself like this? Very simple. Because we are trading the bottom and it's about to start rallying up, we are catching the bottom, trying to start seeing the opportunity for a reversal. We need to be careful. We can't just say now, oh, let's keep selling. No, even though we have been selling and it's a downtrend, but we have already hit the bottom. And at this point in time, we need to be careful not to fall the trap of catching the bottom and be trapped. Instead of, some people want to buy now and they are buying. It's okay, it's a buy. Let me start buying now, placing their buy stops somewhere around that zone. And then the market rally down again and break this previous low, and then you have a massive loss. Why? Because you're trying to catch the bottom. You need to have a clear confirmation to be able to get that trade going. So what do? On a daily time frame, we can see clearly a channel that confirms it. So I'm building up more confluences that will make me buy if the market breaks this high. So I have a trend line breaks. I have a channel here that the market is respecting at the bottom as well. You see, I have a channel. So I'm looking at it. Let me take that off so you understand that channel I'm trying to bring out. So let's say I have a channel that obviously I do have a channel. That's a channel there. So I'm looking at what the market is doing right now. So I have a confluence to buy this market if it breaks above there. But if the market smashes and reject it and come all the way down to the zone, then I can consider, which I believe it may not happen, because we can see that obviously looking at the channel, let me just show you something quickly. Looking at the channel that you can see, it's like a bell of what do you call a repetition of what? Of history. So we see the candle came down, push up, came down, push up, came down, pushing up, coming down, right? That can easily be anticipated, but I'm not going to be caught on guard. I'm not going to just assume the market is going to sell from there now. No. The only way I can take a sell is to watch out what the market do for the first Monday and Tuesday. So I'll look at, oh, let me see if the market is going to break this high on Monday. If it break between this high between tonight and the Monday morning, all right. So how do I do that? I go to the 4-hour time frame now. So I'm looking at what the market is doing on the 4-hour time frame. So what did the market just do? The market rejected immediately, it came to that borderline. So how closely can this market go? Is it going to start dropping from there and then continue the observation of this channel? I'm thinking aloud. I'm thinking aloud. I just saw the market rally up and it got down there. Will it come all the way back down or come all the way to this zone where we have an order block and then rally up? Now, I use the word order block. I just got some of you who are smart money traders. Some of you who are institutional trader. How do you call it? Whatever you call it. It doesn't matter. All of those terms are just language. Don't worry. I can interpret them all. I'm doing my best. So what? I can see another block here. Why? The market rally up with this push by buying up here, came back here, rally up again, and then the market come back here. That's it. Or it might come back here because this is another order block. Right here, the market bought, look at it, it's sold from here to push price down, take out liquidity, and then rally up. And then it might come back here, all right? Price may come back to the zone and rally up again. Something like this may happen. So I'm very careful. I don't want to be caught on guard this week. So the market might rally again all the way down to this other block and then shoot up. So we might have this kind of trade happening within this zone this week. You see what I mean? So you need to pay attention to what the market is doing. You have to pay attention to what the market is doing. Very important, especially when it's coming to a point of reversal. The market is trying to change its direction up. Okay. Now, if you look at this 4-hour time frame, what pattern can you see? A channel. Some of you are seeing a head and inverse head and shoulder, but it's not that clear. You might say this is a head. Let me remove this line so you can understand what I mean. You might say, well, this is a head, this is a shoulder, this is a shoulder. Okay, it looks like this. All right. Yeah, it looks like it, but it can be what do you call it? Invalidated. It can be invalidated. Why? Because there are other confluences you need to consider before you can say, well, is a reversal. Okay, that's very important. And also remember what the price is doing, what price is doing at this channel. Right now, at the edge of this channel. So you want to see a break. That's what I saw. I'm trying to explain to you what I saw in the daily time frame, that there must be a break. So if this resistance level is taken out and then it breaks, and then the price also confirming with the confluence of a trend line break, I have two confluences now. So what does that mean? I will now look for a momentum that will make me jump into the trade, put my stop loss here, and I'm taking profit here. You see that now? So that is just the rally up. So if this high is broken, all I need to do is to see that the market created a new higher high and then created push back down for a lower high, and then that's where a higher low, sorry, that's when I'm going to take my trade to take it up to this previous high again. You see it? So we need to actually understand what the market is doing, and then before predicting, okay, and say, okay, this is where the market is going for the week. So at the moment, we are still on a downtrend. That means we still have the sellers present in the market. But the market is at the bottom. and it could stay at the bottom for a while. So there is nothing like oversold or overbought. So you could have on your RSI or whatever you have as your insulator, all right, you will find that the market is actually you find out that the market is actually on the insulator is oversold. All right, you already see it's at the base, but it can be there for a while. The market can rally up on this and then push up. It can break the low. We are not sure. Why? We have to consider a lot of things. The geopolitical situation in Britain, then the war that is going on in Ukraine right now. It appears the Ukraine are gaining momentum against the Russian. So there's something is happening. We need to consider that. And then putting in the technical analysis that we're doing right now to now have a strong reason to get a position. So that's why I'm giving you what to watch out for this week. So I'm not giving you a specific direction, but I'm giving you what to watch out in the week 36. And this is a special analysis that you have never heard before. But this is unique because we are at the bottom. So now you need to watch out for what the market is going to do. Where at this zone, is it going to push back up and break it, or is it going to reject and come back to this low and take out this low? That's your watch you need to do, and that one is on you. So for those of you in the mentorship class, in the mentorship with me, going on the daily trade with me, you know we are going to look into this whole thing in detail. So every day we know how we're going to take a trade within those moves. Okay, that is setting. So if you are not on my Telegram group, you're going to be missing, because I'm going to be sending in I don't call it signals, I call them analysis, trade analysis that we're looking at. So you want to see what we're looking at on a daily basis. Okay, you want to see that to help you trade in line with what we're looking at. And that's when you have to go to on this video, there's a description section where you have to go and follow the Telegram channel and join us in the Telegram group. Use that link there and be part of what we're going to be looking at this week. Okay, but all together we are on a downtrend, so we still expect the market to give us some opportunity to sell, but there is a but. The market may try to buy, but until he break this high and break this high, there is no proper reversal. So why? Because the market can come here and sell. That can happen. The market can come over here and sell again. That can happen. You get it? But remember, between this zone or this zone to this zone is about 700 pips. Between this zone and this zone is about 350 pips. You get it? So this is a lot of position for you to make money as a day trader. So that's why you need to pay attention to what the market is going to do from a Monday, from tonight to tomorrow, and then we see how the market is working out, because I already give you an idea now by creating a channel. So if you know, if you are a trader, you should know what to do here. If you don't know what to do here, hit me up. You need to get educated. All right, you need to know what you're doing before you trade. So anything now, let me help you for those of you who still need a clear understanding, and then we run it up. If I go to the 1 hour time frame, which is the last time frame, the lowest time frame I'm going to go for this training, for this forecast analysis, I can easily catch any trade that I think might happen now. So what I'm looking at, two things. For those of you who are already my student, you understand, you already see what I'm seeing. So I know there's another block here, there's another block here, but I think the market will eventually do something reasonable to give me some trades. So what do? I can think of the market, all right, coming down, breaking that trend line, and give me an opportunity, all right, to sell to the zone, to the previous low, or to this other block. I could see that. But I'm not going to sell until I see a proper push up. right? I need to see that the market pushes up again so that my stop loss will not be that high to take. So I'm going to see push up to that zone and a rejection again on the trend line. So what am I looking at? I'm looking at something like this to happen, a push up, a drop, another push up, and then a drop. So this is my sell zone. You see now? But for me to sell, if the market break this trend line, and now for me to sell here, I'm chasing the market. That is not how to trade. I'm not going to say if it breaks this zone, I'm not going to sell it. Why? Because there is an order block here, another order block here. So what he's telling me is market sold. Hey, don't write on me. Listen, call your day. I might take you out of my, remove all your lines, please. Remove all your lines, call your day. Coyote, remove your lines. These are your lines. You drew this, Coyote, please remove your lines. I don't want to be obstructed on this. Is he there? Okay, last warning. I don't want you to do that again. If you can't take it off, I'll give you last warning. If it happens again, yeah, I can tell you're struggling to remove it. All right, I can tell you're struggling to remove it. Let me wipe the screen again. So it's wiped. Please don't write anything. All right, so I'm looking at possible a sell here. All right, I'm looking at that to happen, but I need a little push up. I'm thinking I need a little push up so that my stop loss will not be that high enough. Like I have something at this zone, which is going to be around 30 pips, nothing bad as a day trader. And then I'm looking at a stretch that this candle will break that zone and I'll get in. So I'm targeting this zone, which will give me about 90 pips, which is a lot of pips there, 90 pips. So I'm expecting the market to drop to that zone and then give me a sign there, or drop to the zone and then give me a buy zone. So that's what I'm looking at on a lower time frame if I'm going to trade this week. So I'm looking at, as I'm looking at it, obviously I'm going to trade this week, but I'm looking at what possible I could do, looking at what the market is going to do right now. So I can see that there's possible opportunity. But what about if the market pushes above and break this high? We already established that fact. If the market pushes above and break this high, we should be expecting a push up, a buy trade to happen, right? But how? By following market structure. You don't just get in and buy. Okay, you need to work out on market structure. But I don't think the market will push up that way and buy. I think the market is coming down to this other block, this zone here, this zone where the market bought before. Okay, I mean sold to rally up a buy and then eventually took off. Okay, so I could see that there was a play here that a lot of people didn't see. They dealt with retail traders right there. We, the retail traders, were dealt with. For some of you, you lost some money here, right? There was a dealing here that happened. And throughout the night, before you woke up, there was a rally up. All right. Now, a drop. We all sold. I think most of you sold this market last week on Friday. Was it? So I sold this market. But now there's a rally up. So I'm thinking the market may drop to this zone and then take off again. So you can, like I was saying, you can sell to this zone and then wait for market to come to this zone and watch out for what price will do here and then rally up to break this high. So that's the only way they can take off this high. They will have to come back here and tap into the zone or this zone to take that market up. All right, that's what we're looking at. So this week analysis is about detective trading. You have to, I use the word detective trading. You have to be conscious of what the market is going to do within this zone that I just highlighted before you can take a trade. It's not going to be that easy, but you can find them if you are smart. You know, when I mean smart, you're catching the market structure. You can understand market structure, the behavior of the market from these time frames. Okay, we just did an analysis from a monthly time frame to the 1 hour time frame, which is the smallest time frame you should be able to look at the market before you take any position. Now, this is it, guys. This is it. So get ready for what the market is getting ready to start reversing, but not as much. So there will still be more selling going on until this high is taken out. If we don't take this high out, there is no reversal. Why? If you go to the higher time frame again one more time, you will see that why this high need to be taken out. If that high is taken out, then we have a proper reversal. So remember that the market has been dropping for a while now, for a long time. Okay, the market has been dropping for a long time. And because of that, the reversal would take even much time for it to happen, but it's going to gradually rally up. So we're going to be looking at structures for this to happen. So if you look at again, the daily time frame, you can see what I mean. All right, looking at the daily time frame, you can see what I mean. Why? Because this is the last head or the higher, lower high that the market created before this swing low. All right, this is the lower, super lower low here. And now we see structure here. We see another structure here. We see another structure here. So if you look at this low, okay, this is break of market structure. And then we see a retest and a drop. Okay, so if the market is going to go up first, you need to take out this structure. All right, and then push all the way up to break this one. So this will not be a break of structure that we're looking at before we know there's a rally up. Do you understand what I mean? So that's why I'm saying that until this high is taken out, we are not sure that we are on a reversal yet. You should be able to understand that based on market structure. All right, so any question, guys? Any question? So I want you to be a detective trader this week 36. You must get something out of it, out of this analysis. You have any question? Any question, guys? You understand what I've just said and what we've just done? If you have any question, you can raise your hand. If there are no questions, I believe everyone understands. Wow. So I was that clear as the day. Thank you. That's no. Okay, one person have a question. I wanted to say, wow, that's awesome. Okay, yes. I don't know what that name. Okay, Touchy. Yeah, Touchy.
Yeah. Good afternoon, sir.
Afternoon. How are you?
Condolences. My condolences to all of you that are GBP people.
Thank you.
All of us that are GBP people.
Thank you. Awesome.
My question is not about this trading, although it's just about trading view.
Okay.
I saw you do something last week, but I was trying to figure that out, how I would do that without asking you, but it seems I couldn't do it. Like you had psychological levels on your 15 minutes.
Yes.
And you were doing some analysis and you made the psychological level disappear, like
okay,
you toggle on, off and on. I don't know if that's exactly what you did.
Yes.
Yep. How do I do that?
It's on the, like, you see the chart, this chart here, right? See this line here. You will see on any indicator, you will see an eye, something like an eye sign here. So once you put your indicates, what do you call it, your mouse on it, it shows you hide. Once I click it, you see the candles get gone.
Okay.
And you on it, off and on, off and on. That's how you toggle anything off. Anything that has to do indicator or trend line.
Okay, how do you do that for psychological level? You manually draw your psychological level, or they are indicators?
I use, like I just did, I draw them most of the times. Like now, this zone here is a psychological level of 1.2200, this zone here. So to take it off, I just click. It's hiding. You see that? I toggle it to hide.
Okay.
Yeah. And you turn it back.
Right.
Yeah, that's it.
Okay. Thank you.
You're welcome. You're welcome. Who else hand is raised? I saw somebody hands raised. Yes. Sal, is it Saluhu Mohammed. Let me unmute you. All right, go on.
Good evening, sir.
Yes, sir.
You hardly find you always find my name difficult to call. And I
I'm
told you I
trying.
use
I'm trying. Don't mind me. Forgive me. I mean, it's
You-
Salihu. It's Salihu. I got it.
yeah, but I told you to use Mohammed. That would be simple for
Oh,
you.
yeah. Mohammed, I got you. I got you, bro.
Yeah. I just wanted to just clarify this psychological level.
Yes, sir.
If I can use them as my support and resistance zone, like if it serve as support and resistance zone too.
Say that again.
I said I just want to confirm if psychological level serves as support and resistance zone also.
Yeah, kind of, but it's a stronger psychological levels really are based on random number zones. They are not just line, they are just zones. Like this one is a zone that price play out. Do you see what price did in this zone massively?
Yeah, I rejected.
Good. So that's it. That's how psychology, because bank tends to recognize that zone as a way of giving that. You see this one? This one here I just drew here is a psychological zone of 1.1900. That's why I'm looking at that zone that price will go there and react.
Yeah, and I noticed something that each time my price get to its psychological level, it's like once there is rejection, it gets to another psychological level or even break another psychological level to another one. Like they react between each other.
Yeah, you need to actually just pay attention to those zones. Like here now, this where I created a strong another support a resistant level. Why? Because it's a psychological level of 1600.
Okay.
So if price break that zone, it's going to rally up to 1800.
To the next psychological level.
1700, 1800, and all of that. Just keep going.
Okay. So that means psychological level holds a lot.
A whole most ground. That's why we trade it. That's why we look at it.
All right. Thank you. So I really appreciate it.
You're welcome.
Thanks for the free lessons, sir. God will reward you more.
Thank you, sir. Amen. Thank you. All right. Who else? Are we all good? All right. Thank you, everyone, for showing up. Now, if you haven't subscribed to the Telegram group, go and do that. Subscribe to the YouTube as well if you haven't done that. I think I should obviously allow some of you to see that. Let's see a YouTube channel, and you can see that we have our channel there, which is here. So yeah, go and subscribe. Hit the subscribe button, guys. We need to hit 500 quickly. We need to hit 500 subscribers. We just started, so we need to hit 500 subscribers. Guys, let's do this as your way of saying, your compensation. If you want to really compensate me now, please subscribe. Anyway, subscribe because we need to help people. It's not that I really depend on the subscription, but you know what? We need to help people. So I've already sent the link to everyone. So if you are there, click it and subscribe. And leave a comment. Watch the video and leave a comment, okay? Leave a comment. If you have any questions, because this video is going to be right there today. We're going to put it there. So yes. Odesami, sir. Odesami.
You've answered the question. You've answered my question.
Oh, okay.
Thank you.
All right, sir. So we have some materials there that you guys can use. It's going to help you on the video on YouTube. So if you haven't subscribed, go and hit the subscribe. We have videos, a lot of videos so far. So I think these are good content, massive good content that you can actually spend some time to gain a lot of knowledge. So yeah, so go subscribe. Let us know what you think. Leave a comment there and get it. So thank you so much, everyone. I appreciate you all. And I'll see you this week. and hopefully we'll do opportunity to trade together on the Telegram group as a group, as a team. So until then, enjoy your trading week, and I wish you a wonderful many peeps ahead. Bye for now, guys.
Thank you. Bye.
Yeah.